Hello, gamblers. I mean traders. Hiya, Brock. How you doing? All right. Good turnaround Tuesday to everybody. How you doing, Sansi? Kevin, Sinatra, Tom, JH. Nice to meet you. All right. So Canada's acting great. GM Galaxy, Arena. I thought we might get a 61.8% retracement. I think you could take that off the table now. Looks like we're breaking out. 1 in a million clots is less than Arizona. Probably because of yields, Tom.
Less
Huh?
than AstraZeneca, he means. AstraZeneca is
Oh,
one in 500,000.
oh, I see. Okay.
Good
Someone
morning.
sent me an article, Good Morning, Stell, about the variants and, that eventually it's going to make the vaccinations ineffective. Anyway, enough gloom and doom. This was important, what's happening here in the dollar, because it's good or bad. This 92 area has been very important. Okay. I mean, look to your left. And if you look to your left, you'll see, we had this little false breakout, but the next time we got through here, we made the big run to 93.40, which was a confirmed high. 92 looks big to me. You also have the 200 on the 4-hour TF. So to me, okay, J&J halted for the same reason. Wow. Okay. Anyway, yeah, we've crossed the Rubicon and we're in a pandemic era, I'm afraid. Yeah, gold is, Tom. Oh yeah, nice turnaround Tuesday. That was Stell, right? Today, Zig? Was this Stelios today? There he is. There's Stell. Nice hat, Stell.
You know me. I'm classy.
Huh? It's like, you wear a tux on turnaround Tuesday. You are classy. Anyway, so this 92 area is important. This may be it for the correction in the dollar. The pound gave it up last week, and I thought that in the euro we might get one more shot up for a third. I mean, it could still happen, but definitely cable's relative weakness. I mean, really, what do you want to be short? Something that's close to making a recovery high like this, or something that fell apart with a weak dollar? Anyway, I want to take a look at a weekly off number for the dollar. Let's see what it'll take to get a 2-week reversal. You need a pretty good move back up to where we were a couple weeks ago, 93.02. So keep an eye on that. Should we be able to rally back up to 93.02, that's one heck of a rally, but at least 260. So it's important. And if the dollar is turning up and we're getting set for another wave, it could be interesting to see how well the S&Ps can fight that dollar strength. I'm sticking by my guns, and sometimes I miss things. I'll take a shot at the S&Ps when NASDAQ takes out the high of the move. Okay, so that's up around 13.9. We came close to around 850 yesterday, but right here we're looking at another 80 better or so in the next few days. I don't know where that'll leave the S&Ps, maybe at one of the fibs at 4140-ish. So we'll see what happens. VIX is trying to turn, right? It looks ugly, but it's trying to turn. And yeah, gold much weaker than silver today. We've had 2 days down. Let's see. My bias is, especially if the dollar's turning up, that gold takes out the double bottom. That hasn't changed, and I'm still trying to be patient in oil, thinking, here we're challenging this kind of a resistance uh, area here for it to maybe make another move up towards 62 to clean out the bears. And if the S&Ps have another week left in them, I still think that's possible. What are you guys saying here? Maybe both Dixie and metals move together if yields come down. If yields come down, you would think the dollar would go down. Yeah. I don't know, Tom. What's within the wedge, TJ, before I turn it over to oil? Okay. Still within a wedge. Okay. A rising wedge, a falling wedge. Anyway, there's many different ways to skin a cat and look at the market. Okay. So anything else I want to touch on? Blake's scenario in Aussie is playing out. Let's see if we're just going to roll over and maybe head towards a 3. Here's a 1, 2, 3. So that's about it. The short that I took last week was in the 50s. I wish I was still short. But one of my mentees pointed it out to me that if yields are going to peak and start heading lower, that the PMs should like it. Okay. And I pointed out that, two things happened last week. We went to major resistance, a breakdown, and came off in gold. And then you know how the 730 level was holding, so far that's given up the ghost. But, I can't rule out that we could just pull back and then make another wave. It's just not my bias is that the dollar is going to go. It's going to take precious metals down with it, and eventually the S&Ps. So that's what I have so far. Looking at, Canada's acting great, right? Keep your eye on USD MEX. Maybe Blake will have a comment on it, but I thought we might get one more low here in USD MEX, but looks to be trying to turn the corner. Uh, Blake trades this a lot. Bitcoin is flying. I know it's flying, but yesterday I said that we had to make a new high, right, Arena? So we did. We're up 3,000. Okay, so we've made the new high. Some of the shorter term stuff is still confirming this, 2 hour, 4 hour, but not the daily. I mean, we had to clear this high. Okay, so now we're in, there's an IPO as well. I believe it's Coinbase or something, IPO coming out today, Coinbase, yeah. So, the market's up on this, I wouldn't be surprised if Bitcoin is buy the rumor, sell the fact on a 3 drive up here. Okay, so just something to consider. This is pretty classic form right here. I'm not saying short it. I'm just saying that, if you've been fortunate to be riding it, there's nothing wrong with taking something off the table on a 3 drive up here, even if the 3 drive fails. So money management, you got to book it. It's not a profit till you take it. And the 10-year again, I'm thinking that we're topping out up here on the 10-year, but we could also push one more time. And I would say that pound is still the weakness. Okay, that's not a good looking chart. I still think we're going this double bottom that we've had here in the pound. I don't think it's going to hold. And if by some chance I get a rally back up towards 138, I sold it yesterday and just scalped it. But if I get another rally up here, I would short it. It should mean lower yield. It should mean a lower yen. And when you're looking at the yen, still got plenty of room to correct, right? We went from rallied about 800 pips. Why can't it pull back to, this 108 level or so? But it doesn't have to either. This is pretty high momentum, you know. And this, I have a little different line than Blake. I have the breakout line. It went right to it. I had it drawn. But, to me, it's right here. It's in no man's land. So it's an I don't know. 60 is support. Okay, well, Nick is very good.
Well,
So,
let's, hey, Dale,
see.
good morning.
Hey, buddy.
So let's stop and talk a little bit about the yen really quick. And
Okay.
you know what I like to do, just to shake things up a little bit is, and good morning, everybody.
Good morning.
Let me go ahead and do this real quick. You see the dollar yen? Okay. That's the chart I'm looking at. It's kind of messy, right? So I'm just going to go find a different feed really quick, and I'm going to go ahead and delete that. And let's just look at let's go to the weekly chart. Okay. And now you're looking at a weekly chart, correct?
Okay. Yes.
And then this is June 2015.
Yeah.
Oops. That's the highs from that's COVID spike up and down, right?
Yeah. Yeah.
And this is where we're at. So if you want to see how well we've respected that trend line, it is basically to a T. I mean, there's the highs from last year, right? This is the highs from March. We broke out, then we came down and retested that in April. So you can see how important this trend line actually is, because we've had 1, 2, 3, 4, 5 touches of that trend line. So the bottom line is, in my opinion, is if that breaks back down, we are going lower. And is that possible? Yeah. I mean, if bonds bounce back and yields drop, if stocks go down and yields start to drop, and the yen starts to catch a bit. Remember, this is really interesting about the yen pairs, and I'm gonna I want to stop here and talk about them, since we've got you here, and there's only 15 minutes or so before the next interview comes up, and we've got Steve and Stelios are probably going to want to chime in here. But and so before I even go into what I'm about ready to say about the yen pairs, let me just say, for those of you that are not part of ForexAnalytix, thank you guys for joining in and listening in today. We appreciate all of you guys. And if you want to have a further discussion about like the yen pairs and what might happen with those yen pairs, remember we have webinars for, like, we have the Morning Edge that starts in actually an hour, and that's for the ForexAnalytix community, like all the people in this chat room, and even if you're that's us chatting this morning, about 80 of us this morning, just you can see all the conversations that are happening, blah blah blah. Anyway, so come join us in the chat room. But you don't, even if you're not in the chat room and you're just a light subscriber at $19 a month, you can listen into our private webinars for our traders. Now I'm going to go back and talk about this yen. So what's interesting about this yen, Dale?
Yeah.
What happened at the beginning of last year with the yen? Do you recall? Now let's get rid of COVID, the COVID spike down, and let's stop right here. This is the beginning of 2020. Do you remember what happened at the beginning of 2020?
No.
It squeezed the
yeah.
out of everybody. You guys recall that? Some of you might have been stuck in that. I bought it. You know, when I was you know, trading it at Gallos, and we when that broke this trend line right here, and it was around the 111 area.
Mm-hmm.
And actually, it wasn't even that one that now that I'm thinking about it, it was this one that I traded aggressively right through here. This is the one. Okay. When it broke 110, you guys probably remember that. It was a huge squeeze through 110. There was talk of, it was a lot of the Japanese postal fund, blah blah blah. You guys might have recalled that at that moment. Oh my gosh, I bought the crap out of the dollar yen right there and all the other yen pairs. And the problem is that I was, you know, I made good money, but I got a little greedy because I'm like, oh, this is a huge rip. And then, you know, we came slumping right back down, right? So we squeezed out everybody. Then we came crashing down. Now this, remember, this is COVID. This is COVID lockdown, right? And then, you know, the dollar ripped back because of, you know, the post-COVID, you know, all the liquidity and blah, blah, blah. And so here we are today, squeezing again past this major trend line. And my opinion is, at this point in time, the market's nice and short yen right now. Nice and short. Everybody's long dollar yen, everybody's long euro yen, everybody's long Aussie yen, everybody's expecting the yen to continue to weaken now. So what happens if we get the opposite of that? And why would that happen? I mean, you know, just this morning, you know, stock futures is down a little bit because of the J&J news, which really sucks, by the way, because guess what I was getting on Thursday?
So does that, how long are they suspending news?
I just got the news this morning, and I haven't, my appointment's for Thursday, so I don't know.
Yeah,
I'm gonna just try to reschedule with a different vaccine, I guess. I don't know. I might even just go in for my appointment and see what happens. I'm like, you know, okay, so they had 6 clotting cases, like, or whatever the number is. Yeah, it's like, even if I didn't hear the news, or, you know, this didn't happen, you know, who cares? You know, just give it to me. I don't care. But anyway, I don't know if they're going to be able to administer it, so I have no idea. Anyway, but you know, you got all these variants that are picking up steam. Michigan looks like a crap show right now. You know, Canada does too. How about if we have just another surge in COVID cases, and the market, you know, takes notice, and all of a sudden, you know, bonds rally, yields drop, and the dollar yen slumps right back through the, you know, 109 level. That's a risk right now. I think if you're thinking that the dollar yen and all these yen pairs, you know, we've taken out a 6-year trend line and we're holding above 109, it's a slam dunk for a long. I don't think that that's the right mindset at the moment. I think if you were around last year and you did take this trade above 110, you know what the risks are, right? So anyway, that's just, I just want to point that out, because I don't want people getting really very comfortable buying all these yen pairs right now. And then on top of it, then you take like the euro yen. You guys see the euro yen's at an 11. Wait, is that 11? No, 13-year trend line. And we are struggling at the 130 level. We're struggling. We can't push above the 130.60. I'm not saying that it's going to, or it won't. I'm just saying we are stalling, and we've been stalling here for like a week and a half as equities have ripped into all-time highs. So, you know, you got to be careful. These, you know, these yen pairs could really pull back. And so Forex Gal asked, any fibs on your dollar yen chart? You know, I do on this yen chart right here. Okay. The major fibs that you got coming in, okay, are like you have this 127% extension comes in at 112, but we're like in between fibs right now. We really are. And, you know, you could probably go, I mean, I wouldn't even look at that because this is previous move back down in 2016. So it's irrelevant right now what any of these moves are to this move, because this entire move back here in 2015 to 2016 engulfs this entire move. So whatever's happened back here, like if you do this, these fibs right here are irrelevant to what's happening right now. It'd be different if we were outside of this, move, but since it's not, you have to pay attention to what's happening, and because it's a triangle or consolidation pattern. Okay, so we're really important to know about fibs. That's why a lot of people, I'm going to be doing some webinars regarding Fibonacci's, and I mean, I'm going to do some free webinars. We'll have some paid webinars for very advanced analysis, but stuff like that. I've been watching people on social media for like the last 10, 11 years. And I'll tell you this, people plot Fibonacci's wrong all the time. And they're always looking at the wrong numbers and they wonder why it's not working for them. You know,
fibs don't work, they'll say.
Yeah, then the fibs don't work. It's how people plot them, and I've watched, like, especially the newbies, 90% of the time they're doing it wrong. And I remember
as far as where they're anchoring and measuring from, is
exactly.
that the major?
And then what happens is they measure them from the wrong points, the data points, or they're looking at irrelevant data points. And I got to go backwards here. If you know, in 1997, I spent 2 weeks with
Fib Queen.
With the Fib Queen. I actually spent a couple weeks with her too, but that wasn't really where I got all of my knowledge. I got all my knowledge was from
Larry Pesavento.
And I went to his house for 2 weeks.
Yeah.
And he is the guy that taught me how to plot fibs using I should show them to you here. Give me 1 second. Ugh. Dale, I'm still here.
All right. Blake is going to, he's got the fibs on a weight machine. So blow the dust off.
He spent 2 weeks with another guy at his home, supposedly learning fibs.
It's a little my office is a little messy right now. Let's see, and it's can you guys see me? Hey,
it's okay, Blake.
We got you.
Woo. Yeah. All right. Sorry. Hair's a little messed up in the morning.
Love is love.
What's that?
Steve saying, you know, you spent 2 weeks at a guy's house, and it's okay. We love
this is how I learned how to use fib.
Yeah. Huh.
These are the exact ones that I learned on in these protractors.
Protractors.
Print out charts, and I still have them. They're old school.
Yeah,
so,
old school's the best.
That's what they say, right?
Well, if you're old.
If you're old, yeah. I don't even know what you guys can see here. It's a bit of a mess in my office right now. So.
Oh, it looks great.
Anyway, but I'm gonna tell you guys one of the things that I've, like I said, I've watched over the years is people really plot Fibonacci's wrong. and so I'm going to be doing some specialized trainings on those moving forward. So it's just it's a shame to see, and even to this day, I'm like, yeah, you know, I would figure people would straighten it all out by now, but they haven't. Anyway, all right. And by the way, it's very early in the morning here. If you guys are wondering why I got a hat on, and you know, anyway.
How early is it?
Huh?
How early is it?
It's 5:25 a.m.
Oh, wow.
And considering, you know, I probably, like you, Dale, I got up at a 3 handle this morning. So
even time you call it a handle.
yeah, I can't, you know, I can't wait till we get to about 8 or 9 where I can go take a shower. So
yeah. All right. I know
all right. Well, hey,
tough to get
Steve,
up at 3.
Stelios, good morning. How are you guys?
Good morning.
Good morning.
Listening to your adventures.
The adventures of Fibonacci time.
Yeah.
So you know, I was pointing out the yen, and I am going to reiterate here that I think it's more driven by yields, but people think, and I believe the market is completely sold on the idea that yields are never going to go back down again. We're, you know, yields are going higher. You take you take the 10-year, inflation is going higher. The 10-year is going to be over 2% anytime. Dollar yen is going to continue to rout. That is where the market's at right now. And I'm not saying that the market's wrong. And in all actuality, you know, I think yields are eventually going to go higher, but can't they go lower before they go higher? Isn't that possible?
They could go back to 1.
Yeah. So they could. So Stelios, Steve, why would yields actually drop?
Risk off, I think. Only that.
Yeah.
Really.
Yeah.
Risk off? Okay. How about if the Fed actually is not pulling our leg?
Would
Let's
they come
say
in and do something?
let's say that the inflationary pent-up demand pressures that you're feeling right now is really transitory. I know they keep telling us that it's transitory, and the whole market and the whole economy and everybody out there, myself included, calls BS, and they say, you know, no, this is it. This is the time. It's always been the time. We were going to have massive inflation a year ago, 2 years ago, 3 years ago, right?
Yeah.
Well, how about if it is end up being transitory again? And then possible that yields could come down again.
Yes, of course. And the Fed doesn't need an excuse, really. I mean, they can do whatever they want.
Depends on what you call transitory. We just got in a single quarter the second highest PPI readings in 12 years.
Yeah, I know. We just had a big, massive shock in the world with COVID, and then a massive amount of stimulus that hit the market worldwide. Of course, you're going to get some sort of. I'm not arguing for or against here, but what I am arguing is, let's say the Fed is right. Let's say the Fed is not pulling our leg. Let's say the Fed, those guys with the PhDs, and you know, they've been in economics for 40, 50 years. Let's say those guys actually know what the hell they're doing. Let's just
history
pretend.
proves that they have no idea.
Okay, let's just pretend. I'm not here to argue. I'm here to say, let's pretend that they are right. What happens to yields?
Yep, they can go down.
Yeah, that's why I'm like here. But again, what the whole reason why we're having this conversation, and I'm not here to sit here and say I'm right, you're wrong, or they're right, you're wrong, or you're
just keep
right,
an open mind.
I'm here is I'm telling you, I'm showing you guys what if. That's all trading is. Trading is what if
Probabilities.
This happens, I am going to take this action.
Yeah.
Right. And so if yields start to fall, guess where I'm going to look? I'm going to start buying yen. That's all I'm trying to point out. That's it. And the dollar yen might drop through 109, and then you might have the euro yen have an epic failure at 130, and we see 125 again, you know, back down here. I mean, those are just, again, it's all possibilities. So, hey, do you have an interview? And why am I so heated at 5:30 in the morning?
You're very passionate today.
I'm passionate this morning.
I know.
US CPI, by the way, just came at 2.6% year on year.
You know what? It's transitory, Steve.
Wow.
Of course it is.
I don't know. I'm just joking. I'm like, I'm a little heated this morning. I need more coffee. How about you guys?
I think you need the opposite
Try
of coffee.
decaf.
Yeah.
I might need some decaf. Anyway, so I know you guys have an interview today. I just wanted to like spice it up this morning, I guess. So
You did.
good.
You did.
Glad. All right, I'm going to go
Decaf
back to
and
sleep.
bourbon. DJ says try decaf and bourbon today. He's a Crown Royal guy. Anyway,
yeah,
is Kathy in the house? There's Kathy. Okay, so our guest is here, Blake, and
great.
you want to close it with, you know, you could hear Blake's passion continue on the Morning Edge, and you know, guys, this is the best team I've ever been part of. Okay, so you know, invest in your own trading career and become part of the community, and you know, you can learn things like how to really tack down your fibs so that you're, you know, with real money, you're trading real fib retracements.
And thank you, and thanks, Dale, for saying that. And hey, and I just want to mention, guys, you know, like Steve and Stelios, my partners here at ForexAnalytix, these are some of the smartest guys that you're going to meet out there. And same with Dale, and obviously Grega and Andre and Paul Franco, who does the European crossover, and Amanda. We got a great team. And matter of fact, when we come back a little less than an hour from now, we do the Morning Edge. You know, myself, Steve, Stelios, we continue with our conversations, and you know, Steve goes into pretty deep analysis into the markets with Stel after I'm done. So really, there's more to it than just what you see here at the Face webinar. So thank you all for tuning in. And I think we should probably pass it over to you, huh, Dale?
Yeah, let's, we can do it now. Thank you, Blake. Good hunting today.
Thanks, guys.
All right. Thank you, Stel, Steve. Thank you, guys. And Kathy, welcome back.
Thank you.
We have to end Blake's screen sharing. I'm looking for Kathy Donnelly.
I'm here, Dale. Can you hear me?
Oh, got you now, Kathy. Welcome back to Face.
Thank you. Thank you for having me. It's great to be back.
Yeah, and I think, you know, it's always a good time to talk to you, Kathy, but with markets continuing to advance, yeah, I'm interested in, you know, some of your prior calls and what you're looking at now. If you could please share your screen. It's the green box. Here we go. So, okay, oh God, I love that. Mental capital preservation, you know, because I'd like to know what your ideas are about it, because I think one of the biggest challenges for people, especially over time, is burnout.
Yes.
I know I've gone through it. So, God, let's hear about this, Kathy. Great topic.
Yeah, thank you, Dale. Well, I was thinking about something different because, you know, when we talked last time, I told you, you know, or I told the audience, you know, we were talking about, okay, well, you know, what's going to be looking good and what am I looking for? And I'm still waiting for some of these IPOs from 2020 that came out in 2020 to start setting up, you know, for some institutional advance phases, essentially waiting for that institutional due diligence phase to complete so that we can look for those first mature bases and then catch those runs.
Do you agree with Tom Petty, Kathy?
Sure. Yeah.
What,
definitely.
waiting is the hardest part?
Waiting is the hardest part. And, you know, there has been rotation. It's not like there hasn't been stocks to play, but as you know, my specialty is IPOs, and I really want to look for those types of setups. And, we had so many great runs in 2020, and now those ones that have run have been correcting. And the newer ones that had initial runs right after their IPO, first base, and, those are now correcting. And so I think for me anyway, I'm still waiting for these setups to set up, and they're not there yet. So I thought we'd talk about something a little bit different that we can use to play on stocks from big stocks that ran last year, a potential holding method, and then also something to look into when you catch that next big one. And that's what mental capital preservation is about.
Okay. Yeah, everything's psychology. I think it's all in our heads, Kathy.
Well, it definitely.
The problems, the talent, everything is in our head. So go ahead. I'm laying on the couch now. Give me some mental preservation therapy here.
We definitely have to train our brains, just like we have to train and exercise our bodies. We have to train our brains as well, right?
Yeah.
So Jesse Livermore, one of the greatest traders of all time, he said that preserving mental capital is more important than preserving physical capital. So that's kind of, the origin of what we talk about in the book. So.
Okay.
So simply, it really, what I'm going to be talking about is a mental capital preservation, or MCP. That's what we like to call it for short, holding method. And this is used to determine the minimum percentage of profits you're willing to retain, or the amount of profits you're willing to give up, which sounds kind of, that's why I like to say profits retained, because if you take the other side and say, oh, I'm giving up profits, what?
Yeah.
While holding a leading stock for a bigger move. Does that make sense?
Yeah, and it's one of the hardest things to do. But you know why? I'll tell you, we'll do a little confessions, because as a trader, I think I'm good enough to get out after a run, and that I'll be there for a retracement to recommit. And sometimes you don't get the retracement. Sometimes you're distracted and you don't execute. And then, you made the tough money, and the windfall money, you're not there for.
Right.
So,
yeah.
I experience that still.
Me too.
Yeah, when I had my COVID shots, Kathy, on the second one, I said, will I be inoculated from losses?
There you go.
First really didn't understand it, but anyway.
I love it.
This runs to, like I've said before, there's one thing to make a great forecast. Okay, and that's probably the easiest thing to do, right? Because you don't have skin in the game. Then it's even better to make a good trade, because you executed on your forecast. But the most difficult thing is a great hold.
Mm-hmm.
And so this is a great subject, so I'm going to shut up.
Okay. That's a little work. Okay, so here's a little table to kind of show a little bit how it works here. So on the first column, you have percent gain achieved. And so this is something, if you initially buy a stock, you need to use your stop loss rule, your 3%, your 5%, your 8%, whatever your stop loss rule is. So this is, you've already got, let's say here, we're starting with a 50% gain, because this really works after, you've had that great run. Really, I like to say for myself, when I implement it, I like to have at least 100% gain achieved, but you can use it for 50. But the goal here is you see now the second column and the third column, we show if you're willing to retain 45% of your profits, this is the pullback you need to be able to withstand. And what's interesting, right, is the more you gain, the more you can withstand. But mentally, it might mess with you, right? Like, oh, I'm willing to give up almost 50% if you go literally at the bottom corner of this on the right.
I see it.
350% gain, but I'm giving up 50%, to retain 35% of my profits, and or giving up 65% of my profits. Can I really do that? Well, I think you can.
Most can't.
Most can't.
And I'm one of
them. Well, see, I've been a long-term trader. And I
Yeah.
don't know if it's just because my parents used to be value investors. So even though I'm a growth investor, I have this like, you know, value, like, I don't know,
Yeah.
gene of sort that wants me to still be able to hold a big winner for a long time. So this is why I've been studying this and why I've been really kind of trying to look at this and trying to implement this as one of my rules, because I know, like, even just on a normal day, you know, and I have 100% gain or more, my rule right now, I'm going to share with everyone, is, you
Take
know,
half.
I want to retain 50 to 60% of my gains.
Yeah.
And that's almost like my line in the sand, but I also look at the 40-week line. And I want to work toward this MCP 35, because we've done some preliminary research, or I've done some preliminary research, you know, really trying to see if this is possible. And I've got some examples that I've been studying actually since we wrote the book. And that's what I'm going to show you next.
Okay.
But I have to show you how to calculate it. And it's very simple. It's just the buy price and plus the difference between the peak price and your buy price multiplied by whatever MCP stop you want to use. So if you want to use, you know, 50% of your gains, you would plug in, you know, 50. If you want to do 60, you know, you don't want to give up that much. And then obviously it's going to get tighter depending on, or looser depending on which one you pick.
Okay.
So here's NVIDIA. This is one I missed.
Okay.
Initially at this $33.06 buy point. I remember when it broke out, and I think I did have it actually too early, and then I didn't buy it back after this base setup. So, you know, that happens to all of us, right?
Yeah. We're, you know, don't expect perfection at the crap table.
Right, exactly. And this
Okay.
had a great run, really held that 10-week line, and didn't really have a significant correction until after it had 100% gain. So this is really a perfect example of where you could start implementing this holding rule. So here I show the low price at this point when this building this base, which was 95. The MCP 35 was 63.81. So even if it had taken you out, you would have gotten a 93% gain. So I mean, mentally, you were like, well, I gave it all I could, but you know, if I didn't make it, I still retained a great profit. And you know, you can do that multiple times. You know, you're fine. But if you really knew the story and then you really wanted to believe in it, you could keep holding it for even more of a gain. And then here's the kicker, right? Here's the kicker. We're like, there's no supporting averages to support it. It's just falling. Oh my God, can I really hold on to this? Now here, yeah, exactly. Now here, look, $1, like less than $1, but it did not trigger. It did not trigger.
That's amazing. You know, because it is kind of a random. Well, it's not random. You've back tested these numbers.
We've tested it. We've tested it some. I can't say we thoroughly tested.
Okay. Well, is that lucky or is that the system?
Well, you know, let's look left.
Okay. Yeah.
And look where it consolidated again, right?
Right.
It's not completely random, right? Because you know, when you look left,
it's a retest of an important old resistance area and breakout.
Isn't that interesting?
Yeah.
And even if
the market's memory is to the left.
Yes.
Okay.
Right. So if you had gotten stopped out, the other thing I like to use this for, because I'm still studying this. I don't know if I could have held this, but I would be watching this, and I was watching it, and it reset up above it. And then here you could have bought it back, right? Another big leader just having kind of rejuvenate, reset. And now it's, you know, it's been having another great run again.
Yeah.
And at this point, you would have retained 275% if it had taken you out. And then you could have maybe seen, well, it did this setup, and then you could put some of that money back in. So, you know, some things to think about, right? Different ways to look at it. What are your goals? What are you willing to, you know, give up or retain, or, you know, for some of those really great super growth stocks?
How do you help people? Most people don't have this paradigm. And I know you said that, you know, your parents were great role models, trading, investing role models for you, because they bought and they probably had very long holding periods, especially for buying deep value. You have to be patient, right? So how do you shift someone's paradigm for, they're up 50%, they go the door and then just move on to the next trade? I believe it takes several repetitions to change a paradigm and time. So would you walk people through it? Do your subscribers say, Kathy, I want to take it here, I want to get out, and then you talk them down about perhaps there's nothing wrong with doing it, but you could be leaving this on the table. How do you teach people behavior and a psychology like this? They have to teach themselves, don't they?
Yeah, I mean, they have to ultimately be, I guess, convinced. But I think one thing, and I've been talking to a friend of mine about this, is when you show them, well, what's the current unrealized gain now if you had done this? 1,600%. And that's today. If you had bought this base, you'd be sitting on this type of gain today. And that could just be a portion of your initial trade. You don't have to hold the whole thing, right? Maybe you hold a portion so you can experience it and see how it feels. And then the other thing I've noticed when I've talked to people about this is like, wow, well, I traded all around this core, but I really didn't do any better if I had just held it this entire time. So I think that's another way people that I've talked to about this, they start to think about, well, golly, I'm doing all this work and I'm really not doing any better than if I had just held it.
For the broker, they are.
Yeah, right, exactly.
So, okay.
All right, well, let's look at the next one. So I wanted to show Zoom because this is one that I traded, and I no longer own it, and I'll explain that in a second. But if you had bought this initial base here, pretty much right as the pandemic was starting, and very volatile in this period. But this I just want to show because at this initial big correction, you were taken out. And the reason why I'm highlighting this is that, again, as I stated at the beginning, it really doesn't work unless you have 100% gain or more. And here, clearly, if you bought it here, you don't have that cushion, and you need to use other rules if you're trying to stay into the stock, like maybe the 10-week line or whatever, and make sure you're cutting it at your stop loss of 8%. So you would have been taken out here. But if you had bought it early, perhaps maybe that would have been a different story, but you're using different rules here. But let's just say you did get back into it, and you use this buy point as that MCP 35 place, even if you hadn't purchased this there, you could be still using this as a line to watch. And let's look left. Look where that line is. Now, we don't know. This, as of last week and, this week, we don't know what's going to happen. But it hasn't taken out that MCP 35 yet.
It is kind of amazing that just a percentage number and I think that's what you're telling us and what you're noticing, because you keep saying look left. I mean, it is close to a fib number, 38.3, but it's interesting how important technical areas occur right at just what is a raw number of 35%. Is that a coinkydink or what? What do you think?
I think the universe is speaking to us, Dale.
Okay. Yeah. Well, yeah, I mean, it's very close to a fib number. So, a lot of people trade 38% correction. So maybe, 35, 38, not that far apart. So, okay.
So for me, as I mentioned, the rule I've been using lately, 60 to 50% retention of profits, and if it breaks the 40-week line. So I did sell this when it broke, but I'm watching it. I'm watching it for maybe it does something like NVIDIA did that we just looked at. If it never, breaks this line and then maybe creates a new base and starts a new run, I don't know, months from now or whatever, which is possible because Zoom, everybody's Zooming now, right?
Right.
And so it would be hard to believe that it's done, but but we don't know. But we've got something we can look for if we truly believe that this company can continue, right?
Okay. And the
Now
RS rating of 62, does that come into play for you? The relative strength ranking? I know you pay attention to it.
Oh, yes. Well, and I like to look at the line more than the number. And so when I just see that this line is going down and making new lows, that does not excite me at all.
Okay. All right.
So just if you were still holding it, or you know, if we were just playing the game like we're showing here, you would be still sitting on a 200% gain at the current price, not at the MCP price. The MCP price, it would be 157 if it takes you out. So you would be giving up, as you know, I said, 65% of your gains.
Okay.
All right, now here's the really amazing one, Dale. Tesla. Now I have to show this on 2 charts, and our book we highlight Tesla is like the life cycle trade, and we have a version of part of this chart in the book, and now I have it here updated. You know, here was that initial run, that IPO advance phase. Here's our due diligence phase, and just like we studied, it broke out and created this super nice IPO advance phase. I mean, excuse me,
nice.
institutional phase, right?
Okay.
And then it had this first big correction right here. And I remember this because I did buy it here, and this was before we did the research. So lucky, chance, I don't know. I knew it was going to happen. The universe was speaking to me.
Yeah.
I actually was lucky. Yeah. I was lucky enough to play this, and I even held it through this because, again, you know, I was holding on trying to hold on the 40-week line for longer term gains. So here, it would not have taken you out. You'd still be holding it here.
Right.
And then here, you would still be holding it, even here with this MCP 35. And then 3 here, same thing. And now here's the COVID bear, this most recent correction during the COVID bear
and it kept you in.
It kept you in if you were willing to wait till Friday. So this is different. And this is, I think, a good point, because sometimes, you know, especially if you are even a midterm to long-term trader, you know, you like to wait till Friday, right? Because you just, sometimes, you know, the institutions come in and they buy up all those shares. So
also Friday gives you a weekly close, which is more important than a daily, more important than a 4-hour, you know, weekly closes are significant, I believe. So
exactly.
Yeah.
And you know, we can even look a little left here, and we can still kind of see some. I mean, this is a very zoomed out chart or whatever. But you know, you could probably see similar correlations. Let me show you the most recent chart here. So this is the part we already saw. Here's where we cut off the chart, and here's our most recent correction. We're still holding it now, split adjusted. Just want to point that out. But look at this gain, Dale.
Wow. Yeah.
Isn't that amazing?
Changer. That's a life changer.
It's a life changer, even if you didn't hold all of your initial position. Now, I know some people say, well, I don't know if I want to hold this dead money. That's
well,
valid.
You would need, it's not dead money, but you do need the patience of Job.
Yeah. Yeah.
Oh yeah. I mean, really, you do. I mean, you know, and sometimes, you know, it's tough to change, but you know, for people that you know, don't want to be tied down to their trading platform and have to, you know, spend hours and want to go about their lives, this is a methodology that you really don't have to watch us all the time. In fact, maybe watching it is counterproductive.
Exactly. And I think what is also really important to bring up, I was thinking about, is, you know, some of the value traders we talk about that just hold and hold, you know, they're holding with no rules. Here you're holding, but you still have a line in the sand to protect you from anything that could potentially happen. You know, you're not just blindly saying, well, I'm going to hold forever, because you do have a line, because you just never know, right? You can never say never.
Yeah. One of our viewers is saying, Kathy, just so you know, I was a good friend of Job. So, but they're commenting on my age. Let me ask you this: any comment on the pressure? We touched upon it lightly last time. The pressure all these SPACs are under now. I mean, I think they're really having most of them given up, 30, 40, 50% of their recent gains. A lot of them.
Yeah, I mean, they look really volatile. They look really
Yeah.
volatile, and I'm still looking at them, but I don't know. I think, in a year from now, maybe we'll have a little bit better idea of how we can really maybe treat them. But yeah, I look at the chart, I can tell it's a SPAC, and I just say, wow, that's volatile. I really like to see some tight action.
Okay. Okay. So these are your personal observations here.
Yes, I didn't, they haven't been thoroughly back tested. I've been observing this for a while since we put together the book. When we initially did the Tesla model with 35, and is basically kind of how we came up with it. We came up with it based on that initial Tesla model. And then I've been watching it on these other stocks, NVIDIA, Zoom, and others. And so, yeah, and I just wanted to share with everybody. Maybe it's something they can look into. Maybe it's something that appeals to them. I'd love to talk more about it. Best used after gains of 100% or more. Great way to hold a super growth stock for amazing run, and then a stalking method for a potential bottom for it to start a new run. So yeah.
You're always screening. So I know there are a lot of people that I think it's a good idea to have something like this happening for you, along with if you're doing short-term trading. Learn from me that most of my life was mainly, swing. Really haven't had the patience for long-term position trading, and most of the people I know that have really done well in the business know how to sit with a great trade and have a great hold. So, what's the best way for people to learn from you, Kathy?
Well, they can go to our website to, get the link for this interview will be there, and all the interviews that my co-authors have done. I'm on Twitter, and, I don't necessarily start a lot of original tweets, but I'm happy to answer any questions that people ask on Twitter. So yeah, reach out to me there. And then I'm also on LinkedIn as well. Happy to talk to people on LinkedIn as well.
Well, Kathy, another great presentation. I really love mental capital preservation because we think of capital preservation as only being the money, but the psychology and being able to sleep at night, the way to avoid burnout and extend your career was a great presentation. Thank you for bringing this to the table for our community, Kathy.
Thank you, Dale. I really appreciate it. And like you said, it's all about intelligence gathering. So, I really love that. And so, yeah, maybe this is something that will be helpful.
Yeah,
else.
Maybe me.
Yeah.
How about that? I'm at the stage where, I'd like a few Teslas before I check out. So anyway, Kathy, thanks so much for being with us. You're a warrior, and you have a great demeanor, and you're a natural teacher. So anyone that wants to learn how to position themselves in super growth stocks, and whether we have corrections or not, this bull market can extend for who knows, maybe another couple years, even if we had a 30% correction, just like COVID. So,
right.
yeah. So thank you very much, Kathy, for being here, and look forward to talking to you again this summer. Good hunting, and great talk on patience, and that you're, being patient, waiting for these things to develop. We get paid to wait.
Yes, absolutely.
And I could hardly wait till we talk again.
Thank you, Dale. I really appreciate it. It's a pleasure always.
Okay, everyone. Kathy Donnelly, you could find her on Twitter at KGD Investor. Check out her book, The Life Cycle Trade, and go to her website, and maybe she could help you find something that you could, that could be something that aids towards your retirement. And it takes big gains to make up for all the small losses. So again, Kathy Donnelly, thank you for being here today. And everyone, you could join the team and Blake for the Morning Edge in 15 minutes. That's a wrap. Remember, and don't just count your mental capital preservation. count your blessings, and we all have them. Find something you're grateful for. Don't take everything, every trade too seriously. You know, money comes and goes. Time is gone forever. Make it count. And we'll see everyone tomorrow. Adios. Thank you for your attention today.